Hello everyone, welcome to Money Magic. In this video, we will talk about IRFC IPO. So let's start with an overview of Indian Railway Finance Corporation. Let's talk about the company. The Indian Railway Finance Corporation was incorporated in 1986. It is wholly owned by Government of India. It is a public sector enterprise. IRFC is a non-banking finance corporation or NBFC. It works directly for the Ministry of Railways. IRFC raises funds and handles the assets for the operation of Ministry of Railway. In other words, if the Ministry of Railway wants to implement a new project or expand an existing network, all the funding and financial requirements for the same are executed by IRFC. Now, who are the customers of IRFC? IRFC business model is broadly B2B is quite unique. Its primary customer is Indian Railway. Apart from that, IRFC also takes small projects for other railways companies such as Railtel Corporations and Rail Vikas Nigam. Now, what are the products and services provided by IRFC? The primary service that IRFC provides is to raise funds for Indian Railways. It works as an asset holding company. IRFC purchases the required assets and then leases them to the Ministry of Railway. Each of these leases is typically long terms in nature. They extend from 15 years to 30 years. Apart from that, IRFC also indulged in lending activities. It provides fundings to other railway companies such as Rail Vikas Nigam Limited and Konkan Railway Corporation and Railtel Corporation of India and others. Now let's have a financial overview of IRFC IPO. In the 6-year period between 2015 and 2020, the total revenue earned by the company show a CAGR of 12.17%. The net profit increased at a CAGR of 30% as of the total assets that show a CAGR of 17.28%. One worrisome fact, however, is the long-term debt burden of the company. Over the past 6 years, the long-term debt has shown a CAGR of 25.76%. This can be due to the business model of IRFC. According to terms of its contracts with the Ministry of Railways, IRFC takes long-term loans from banks and purchases assets and other machineries. Now let's look on industrial analysis. This will be the fifth railway company to hit in the Dalal Street after the Union Cabinet approved the listing of 5 railway companies in 2017. The listed companies are IRCON International Limited, whose issue price was 470 per share and the listed price was 410. The second company is RITES, whose issue price was 185 per share and the listed price was 190. The third company was Rail Vikas Nigam, whose offer price was 17 to 19 per share and the listed price was 19 per share. And the fourth company is IRCTC, whose issue price was 320 per share and the listed price was 644 per share, which was up by 115.23% from its issue price. The Indian Railway manages and operates the largest railway network in Asia. The approximate route length as reported in 2019 was 95,981 kilometers. As per 2018, it runs approx 13,425 trains per day. The daily average consumer base is about 2.3 crores. Indian Railway is currently the world's largest in terms of the number of passengers carried and the fourth largest in terms of amount of cargo. The graph shows the increase in number of locomotives and passenger coaches over the years. The growth plans of Indian Railway directly benefit the future prospects of IRFC. Now let's see peer comparisons. There are no listed companies in India in the same line of business as that of the company. Hence, industry comparisons in relation to the company is not applicable. Now let's see what are the strengths of IRFC IPOs. As it is government entirely, the cost of borrowing will be low as it provides a maximum level of safety. This can positively affect the interest cost. The financial performance of IRFC is very consistent. The business model of IRFC is very safe as its dealing are mostly with Indian Railways and the Ministry of Railway only. The NPA is 0% since their inception. This means there are no defaults. As of September 30, 2019, IRFC total AUM consists of 60.8% of lease receivable primary in relation to rolling stocks assets, 2.56% of loans to other PSU entirely, and 36.64% of advantage against leasing of projects asset. IRFC has excellent assets liability management. It manages its cash flow efficiently. Its asset liability management model is structured in a manner which ensures that we have minimum assets liability mistakes. And it has also good credit rating as you can see in the screen. Now let's talk about weakness. A major chunk of the revenue comes from Indian Railway. They are the only customers of IRFC. Its growth is also dependent on the growth of Indian Railway. IRFC has a huge debt in its book. The debt to equity ratio is 9.36 as of 2019. This is a huge negative as the standard ratio should be below 3. IRFC is the cost plus model. It has a margin over the overall weightage, cost of lease and rental as their profit. If their margin is not accepted by the Ministry of Railway, this could affect their profitability. They have issued the equity share at price lower than the book value of equity per share. Now let's have a stock valuation. As there are no listed peers with the same business model of IRFC in India, comparing the valuations are quite difficult. We will therefore attempt a different method of valuation. This formula has been given by the father of value investing, Benjamin Graham himself. As we have some financial reports, let's calculate based on the financial year 2020. The financial year 2020 profit was 3659.40 crores and we assume the growth rate of 9.5%. Now after applying the formula, we get the value of 1,633.5 crores. According to Intelligent Investor formula, the value derived above is the intrinsic value of the company. On the basis of earning growth, if we consider a 10% margin of safety, the value comes out as follows. By deduction of the margin of safety, the value comes out to be 19,570.15 crores. As per the basic structure of the IPO, the market capitalization of the company is 4,633.37 crores. Therefore, it is safe to conclude that the IRFC IPO is deeply undervalued. Now let's look the promoters of company. The Prime Minister of India acting through the Ministry of Railway is the promoter of the company. And Shri Amitabh Banerjee is the chairman of the company and you can have a look of other members of the management teams. Let's have a quick intro of the chairman. Shri Amitabh Banerjee was appointed as managing director on the IRFC board on 12 October 2019. He took over the charge of chairman and managing director on the IRFC board on 21st March 2020. Prior to joining the post of managing director, he has been working in the capacity of Director Finance at Konark Railway since October 2013. He has also worked in Hindustan Paper Corporation for 3 years, in Delhi Metro Railway for 5 years. He has held several portfolios in the Finance Department of the Ministry of Railway since 1989 through 2003. Now let's talk about the IPO. The objective of the IPO is to augment the company equity capital base to meet business future growth requirements and to meet general corporation purpose. The IRFC IPO was opening on 18th Jan 2021 and closing on 20th Jan. The face value will be 10 rupees per share. The IPO price band is 25 to 26 rupees per share and the lot size will be 575. For retail investor, the minimum lot size is 1 and maximum is 13. The allotment status will be known on 25th January and the share credits on demat will be on 28th January. And the IPO will be listed on 29th January. Now let's look the important parameter for IPO listing gain. Let's see grey market price. The IRFC grey market price is 1 to 2 rupees premium per share, that is 27 to 28 rupees per share. To get more detail about IRFC IPOs, you can have a look on the description. Thank you for this video and stay tuned with us for more IPOs update and daily update news.